Welcome to the JDC West 2015 Finance Case Presentation, proudly presented by Orbis. Thank you to our judges, Karen Shu from the Ministry of Finance, Paul Danger from EMCO, Prashant Ramanathan from Orbis, Colette Martin from Orbis, Alana Gallagher from BC Ferry Services, and Patrick Wolf from BCLT. Competitors will have a maximum of 20 minutes to present. Immediately following the presentation, judges will have a total of 5 minutes to ask the presenters questions. The volunteer timekeeper will show time cards at various intervals to indicate the remaining time, and will stop any speaker who exceeds the maximum time limit. No questions, comments, cell phones, or picture taking will be permitted from the audience at any time. The audience will only be permitted to applaud following the question and answer period. The audience is banned from any material that bears the name or symbol of a competing university, and we ask that the audience please exit the room immediately following the question and answer period. Competitors, you may begin when you're ready.
Markets are never often correct. In fact, there are times when an asset or a company is mispriced, and this presents an opportunity. Good afternoon, Mr. Benjamin Campbell. My name is Jasmine, and I'm pleased to introduce my colleagues, Devin and Carl. Together, we are DJK Consulting, and we are here today to provide you with some insights on the future of your company, GoPro. So let's jump right into it. So what is the opportunity here today? We are here to see what is the value of GoPro, specifically its media assets. And we believe that there is a huge opportunity for you at hand in the media segment, and you can capitalize on this. And so we recommend to you today to go to your meeting next week, to your institutional investors, and tell them that there is untapped opportunity within your media assets, and that your company is actually worth, on a base case scenario, $104 per share. Currently, your share price is $93. And so these are the 3 key considerations that we've considered today: industry analysis, the valuation of your company, and market sentiment. So let's jump right into the agenda for the day. We'll start off with a situation analysis, followed by a financial analysis, an alternatives recommendation, and then the next steps and risks and mitigations. So jumping into situation analysis.
Thank you, Jasmine. All right, so in terms of the situational analysis today, first I'm going to start off by speaking a bit about GoPro's current market position. Then I'm going to discuss the current market sentiment surrounding GoPro in terms of both analysts on the street as well as investors. And then finally, I'm going to discuss some of the competitive threats that are emerging in GoPro's industry. So GoPro has truly established itself as an international company. It has revenue segments across the world, and additionally, its revenue has grown exponentially over the past 3 years. This has been driven largely by its unique innovation and success in the niche adventure camera market. However, as competition begins to increase, this exponential growth rate is no longer sustainable. It is not only important that GoPro enter into the media industry, but it is absolutely necessary that it does so successfully. So moving forward, I'd like to discuss a bit of the current market sentiment surrounding GoPro. So currently, analysts and investors on the street are unsure about the potential opportunity to expand into media, and even those that do believe it is a good idea for GoPro to do so are unsure how successful it will be, and are unsure how to value the following media segments. So why will GoPro be successful in the media segments? In terms of advertising, GoPro has established an extremely strong presence in the most popular social media sites available, including YouTube, Twitter, Instagram, and Facebook. In terms of why we'll be successful in the licensing media segment, GoPro, through its innovative adventure camera, has created a product where consumers self-promote the GoPro video. It has access to tens and thousands of unique, top-quality, exclusive content, and it has the ability to license these out at an extremely low cost relative to competitors that have to create this content in-house. Why will it be successful in terms of the software market? Well, GoPro has already established itself and has existing software that allows its customers to edit their videos. It's demonstrated that customers have the demand, and through offering a higher quality product and higher quality software, you'll be able to monetize this service moving forward. Finally, in terms of distribution, GoPro recently signed a licensing agreement with Microsoft in terms of through its Xbox, providing its content through the Xbox console. It has the potential opportunity to further expand its distribution through other venues such as sporting events or popular movie concerts. So, in terms of a final takeaway, GoPro has an extremely strong platform to deliver success and future value in the media segment. In terms of competitive threat, we're seeing competition from large consumer electronic companies close in on the hardware product. As well, we're seeing potential media competition in those revenue segments that I just mentioned. However, because of GoPro's unique vertically integrated business model, the fact that its products allow consumers not only to create a video, but to edit it and to share it through several different social media platforms, it has a unique advantage over the competition that it can leverage its existing business platform to mitigate the competitive threats. So I'm just going to quickly summarize what I've just presented to you. So first off, GoPro has a platform for success in media segments. It's going to be successful because it can leverage its current existing content, software, as well as networks. And then finally, it's going to be crucial to communicate this to current analysts and investors. So moving forward into the financial analysis. So in terms of arriving at our valuation for GoPro, we first look at DCF intrinsic valuation as well as the company comparables or relative valuation of the company. So in terms of the company comparables, first off we started with creating a universe for companies that could potentially be comparable to GoPro. From there, we selected the following peer group. And now, the reason we selected this peer group is largely based on their growth profile. One of the major drivers of GoPro's stock price is its expected future growth, and therefore we felt that these companies accurately represent GoPro's growth profile. In terms of the multiple we used to value the company, we decided to value it on an EV to EBITDA multiple, and this was largely because we felt the EV to EBITDA metric provided the most accurate representation of GoPro's current operating performance.
Thank you, Carl. So following the peer group analysis, we wanted to jump into a discounted cash flow valuation. So valuation of the intrinsic value of the free cash flows of GoPro. So we forecasted these free cash flows 5 years down from 2014, and we estimated a terminal growth rate of 5%. So we estimated that the revenue growth would be 20 to 25% as per management's guidance for the next 5 years. Operating margin would be around 15%. The tax rate would be 28%, and depreciation, change in net working capital, and capital expenditures would grow with revenue. So what these are just the free cash flow assumptions for the hardware itself. We also completed free cash flow assumptions for the media content itself, and these are the assumptions following. So we assumed that GoPro would realize revenues from these media segments in 2015. So starting in 2015, and the revenue growth from 2015 onwards for the next 4 years would be 20%. And we estimated that these revenues would come from 1, licensing, and 2, advertising. So let's look into the licensing revenues. We compiled a conservative, base, and optimistic case for this. So we estimated 16 million conservative, 30 million base, and 56 million optimistic for advertising revenues. For our licensing revenues, we got a conservative estimate of 10 million, base estimate of 30 million, and optimistic estimate of 100 million. And these were given from the management's opinions, as for the table shown. So now, adding up these two values from advertising and licensing, we come to a total revenue estimate of 26 million, 60 million, and 156 million for our scenarios. So now on to our discount rate assumptions. For our assumptions, we found that since that GoPro has no debt on its balance sheet, equity weight would be 100%. We assume the risk-free rate to be 2.3% as per the 30-year U.S. Treasury rate. Our equity beta is 0.66, and we assumed a risk premium of 8%. And this yielded a weighted average cost of capital of 7.58% as our discount rate. So given all of these assumptions, what is our model output? So our base case model output provides us with an enterprise value of $12.6 billion. And adding back net debt of $170.3 million that you have on your balance sheet currently, we arrive at an equity value of $12.8 billion. Given that you have 123 million shares outstanding, we arrive at an implied share price of $104 for our base case scenario. So this is our base case. So let's see the range of the share price that GoPro could have. And so for our conservative case, we arrive at a share price of $94, with our base case $104, and for our optimistic case, $134. So what is the implication for all this? Well, your company is currently priced at $83 per share. Given a conservative case, you can see a return of 13%, at least 13%. And at the optimistic case, you see an upside potential of 61% for your investors. So let's just summarize this and we applied a weighting on our valuations, an 80% weighting for our intrinsic valuation and a 20% weighting on our comparables valuation. And this yielded a base case weighted share price of $101. On to the alternatives.
So looking at the alternatives at hand today, we obviously know that you're going to present to a board of institutional investors, and looking at what are some of the key considerations that they need to take into consideration while valuing GoPro and moving forward with a strategic long-term investment. So we do believe that we need to factor in the strategic alignment with not only the hardware of GoPro, but also the media content that will be factored in within the future. And thus we take into consideration not only the industry analysis, but the valuation and market sentiment around GoPro moving forward. So going into our recommendation, we know that GoPro has a huge media segment in terms of the GoPro and uploading content once users have used it and moving forward to social media content. But we really believe that the greatest asset in general is the vertical integration. The integration from a consumer using the GoPro on a hill all the way to Microsoft using it on their Xbox unit. Moving forward, the valuation needs to take into consideration this expansion in the media content and the potential growth that this combination has in the future. So ultimately, it does provide institutional investors with a key factor that they have to consider that the street may not have already factored into their market price. So looking at how we're going to do this, how you're going to step forward in front of the board and portray this value of GoPro moving forward. So first of all, there is the key consideration of diversification of revenue moving forward. The key asset of hardware as well as accessories is the key revenue of the last few years, and as well as 2015. However, 2016 is a realization of the new media content. Looking at the licensing base, there is a significant base of this, of the videos, with thousands of hours of videos that are being uploaded daily. Advertising, there's a social media presence like no other, and with marketing and advertising costs at an all-time low due to the fact that it's word of advice and through media content expansion, this provides great upside as an investment. Through software, there's the ease of access as I talked to. We have the GoPro being able to upload the data to a consumer's home computer and then edit it seamlessly as well as upload it to the internet. And finally, we look at the distribution. And as Carl talked about, with Microsoft integrating this content into the World Wide Web as well as other platforms, this provides greater opportunity through other strategic involvements within the future. So looking forward, with the weighted share price of 80% intrinsic and 20% relative value, we do see that there is a range. However, the base case scenario that we look at of the intrinsic and comparable value is above the market price right now with a fair premium that can still be factored in with not only the hardware growth within the near future, but as well as the media segment and the integration with hardware growth. So we look at the monetization of the software and how this will be realized within the future, and looking mainly at there's a base case scenario of a 21% increase in your investment with considerations of the current market price and the base case share price of $101. So GoPro's hardware is obviously an opportunity to grow in itself. However, moving forward in the media monetization, you have to look at the four segments and how these will be growing independently of themselves. So the media monetization can build a strong foundation upon GoPro's foundation of growth within its actual hardware. So as GoPro's hardware grows within the segment internationally, and we've already seen a focus on the North American market, but as we see integration within the international market, the media integration with this hardware growth will allow substantial growth within the future, as Carl talked about. So as a long-term investment, we do see that there is the opportunity to monetize this and factor this into the current share price that the street is not already considering. So looking at some of the key risks that we see obviously that there are new market entrants. There is a substantial opportunity for companies to step into this market and take advantage of a several billion-dollar revenue opportunity. And obviously, with the key consideration of integrating media into the future of GoPro's hardware, we need to factor in how and why they are competitively advantaged within the market. And this is, as I talked about, is the vertical integration. The vertical integration is hard to combine with the hardware. The hardware of an iPhone is the possibility of you uploading the software. However, there's a disconnect between the user on a consumer basis and the user on the end basis being corporations. Being able to monetize this is an easier step up and can take GoPro to the next level. And we do believe that this vertical integration is their key asset. And the consumer base that they bring will help monetize the media strategy for the long term. As well, the media, if the revenue is not realized, we do believe that this is a base case scenario as we factored into our intrinsic value. And this is the worst case scenario that we see. And the upside is their greater potential with 50 to 60% in growth of the share price if the full realization of the media content is taken into consideration by the street. And lastly, we see the geographic risk. So first of all, we need to look at the due diligence that GoPro moves forward with. How is it going to be able to portray the fact that this is mainly a North American company moving forward into the international market, and how is it going to integrate content from Asia and South America to content in North America? So we do believe that this should be tested on a media basis, tested on a North American basis, and then integrated internationally. But the key fact that we want to drive today is that there is the potential for the long-term growth of GoPro. The 101 share price on a very base estimate, it gives you $101 with a 21% growth of the share price at the current market value of $83. So again, we looked at the industry analysis, and we've seen that there is the opportunity to integrate this, and there is the opportunity to grow on a strong foundation to GoPro, as well as the valuation has showed not only intrinsically, but extrinsically, that the company is fairly valued only on a hardware basis, but on a media basis moving forward, there is significant growth that needs to be factored in by the street. And finally, the market sentiment is the opportunity for institutional investors to be able to take advantage of growth within the near future that other investors may not be able to take into consideration. So we thank you for listening. We now would like to take a conversation about the presentation. Thank you.
Thank you all. That concludes the presentation. Question and answer will now begin.
So, your conclusion then is that the stock is undervalued currently?
Yes, that's correct.
And is it true that it's undervalued even if we ignore the media stuff? Like the base business is undervalued as well. So, how are you going to communicate to the street the fact that it's both undervalued in terms of its base business and maybe underappreciated with respect to the media business? It seems like a big job to try and get both those ideas across.
Yeah, definitely, that's a great question. So it will be key communicating to investors moving forward. As you know, you have a large meeting with several potential institutional investors. It will be important to drive home that there is still future growth in the hardware segment. However, we do think it is very important to really stress and focus on the potential future growth of the media segment. However, it's important that while doing this, you don't dismiss the growth in the hardware industry. So that's just something to take into consideration before you do present to these institutional investors.
And so one of the things about investors and analysts is that they often just wait for the numbers to come through, right? So how soon do you think we need to deliver quarterly results that show the media business?
Yeah, definitely. So that's a great opportunity. It's important to keep in mind that the institutional investors you are meeting with are very long-term based. In terms of when we're going to realize the contributions from the media segment, we do see this down the line. It is going to be a long-term play. We don't see any significant translation of the media segment onto the bottom line until the later half of 2015 or 2016. And this is echoed in analyst sentiment as well.
You talked about some of the risk with regards to geographic risk, revenue from media, et cetera. What about the risk of the users just having everything for free right now for downloading and participating in the video uploading and everything to now having to pay for it?
I think that the key consideration that we need to take in our analysis moving forward is that the consumer is very important to us. And with a large consumer base moving forward and using the hardware to upload what is most valuable, what is the content, that it is hard to, as you said, charge the consumer on the downstream side, but rather create revenue opportunities on the upstream side through strategic partnerships like the Microsoft partnership, as well as moving forward with professional movie designers and movie companies that will be able to integrate strategic partnerships rather than hurting the end consumer that is ultimately uploading a majority of the footage.
80% of your valuation is based on the intrinsic modeling, and you ended up with a WACC of 7.58. I'm wondering if you did any sensitivity around that, how you arrived at it?
Yeah, so for our weighted average cost of capital, we used a CAPM method, and so that's how we calculated our discount rate. As per the sensitivity of the discount rate, we thought that the free cash flows were the most sensitive within our model, and so we focused our sensitivity analysis with regards to the free cash flows, and especially with regards to the cash flows from the media segment, and so that's why we focused on that rather than our discount rate, because we thought that it did represent the true risk of the company at its current time.
And speaking of risk, so what do you think is riskier, the media business or the hardware business?
I think that from what we've seen within not only the advertisement of GoPro, but as well as the strategic partnerships, there's little cost associated with these steps moving forward. So with the marketing standpoint, there's very little cost, but rather it is the social media presence as well as the integration through building the hardware and software that consumers can use to upload and integrate. So I do believe that that's less of a risk.